Do you know where your credit stands right now?
It's poor right now, honestly.
When I got laid off, I stopped paying my credit card debt. I said, if you want to get your money, fucking sue me.
I'm sorry, excuse me. You can change the terms of my 5-year loan?
We're going to start this one off with a guy trying to buy a Challenger with a 488 credit score, which should obviously make that car very affordable. Then we'll move on to the people that don't understand the debt and the loans they signed up for. Why would they? It's just money. Lenders love that kind of profile.
I'm gonna be honest, if I don't see you on Saturday, I might have to give up on you.
Don't do me like that. What y'all got? I was really speaking on the challenges.
I do have 3 Challengers on the lot right now. I have a 2020 with 55,000 miles. I have a 2019, it has 71,000 miles, and I have a 2018 with 81,000 miles.
What are we looking for, like, down payment wise? If you can be transparent with me.
You can normally assume 10 to 20% of the price. 10% of my lowest price one is $1,500, 20% is $3,000. For the other two, it's going to be closer to 2 to 4.
If you're asking how much a dealership needs for a down payment, chances are you're hoping the answer is as little as possible.
Do those numbers sound good to you?
15 sounds great. Y'all credit based, right?
We are going to have to look at your credit to get numbers put together. Do you know where your credit stands right now?
It's poor right now, honestly. I know I would have to do more of a higher down payment.
Can you put a number on poor?
488.
I'm going to be honest, you are most definitely going to be on the higher end, but if you can keep a cosigner in your back pocket, that would probably benefit you. But let's talk about it on Saturday. Start talking to people about cosigning just in case, and we can go from there.
Okay, I got you.
See you then.
There is so much wrong here, from the credit score itself, to wanting the smallest down payment possible, to the price of the car, and even thinking about a cosigner. Like we keep seeing, this is somebody who should not be buying a car unless they've saved up the money first. And even then, that should only come after they've figured out what's dragging their credit score down. The majority of people will be borrowing money, whether it's for a vehicle, a house, whatever. Your credit score is basically a resume for lenders. If it's weak, you don't get better deals, you get more expensive ones.
An 84-month car loan? Why an 84-month car loan?
I want lower payments.
You know that's not how it works. You are paying more in interest over time. 2024 Kia Sportage. And it is $638.70. That's an insane car payment for 7 years.
I feel like 600 is a normal car payment.
No!
Oh, I'm going to refinance it when rates go down.
Okay, if rates go down.
When rates go down. They will go down for sure.
What?
Yeah. If I can't refinance, then whatever. If I can, awesome.
Whatever. I have an 84-month loan. I'm going to be 40, and I finally paid off my car.
And?
You have $39,000. It's worth $31,000.
Lower monthly payments almost always means you're paying more overall. When you walk into a dealership focused on the lowest monthly payment, you're basically asking how to pay the most amount of money possible over time. An 84-month loan doesn't fix an affordability problem. It just hides it. The car didn't get cheaper, the deal didn't get better, the timeline just got longer. And the consequences show up later instead of right now, because all that money going to interest could have been saved instead. On top of that, most people don't keep their financial situation perfectly stable over 7 years.
When I got laid off, I stopped paying my credit card debt. I said, if you want to get your money, fucking sue me. Well, there's a company suing me right now, but they probably bought the debt in batch. So I was looking into ways on how I could respond to the summons asking them to verify the debt. And there was 2 forms that I could fill out. Well, my husband comes home and he says, why don't you just have a lawyer do it? We pay for the services. So I'm like, oh yeah, good idea. I get the call from the lawyer today and he's talking about making a payment plan with these people. I said, why would I do that? Well, I told him my theory is they send out all of these summons just before Christmas because 70% of the time people do not respond to them and their wages end up getting garnished. And the reason I know this is because it's happened to me before and I remember it happening just before Christmas and I forgot about it.
I can understand getting laid off. Money gets tight. I was actually laid off a year ago. But I didn't just stop paying my bills. I was actually more focused and ended up paying off my car while I didn't have a job. I've been saving for a few years. I just couldn't stand seeing that car payment come out of my account anymore. It's probably not that she can't pay her bills, it sounds more like she just doesn't want to.
And this time, I didn't want to forget about it. So I explained to him what I wanted to do, and he says, I've been in the business for 22 years, and they'll be able to verify it. You're just kicking the can down the road. I said, I don't care. I said I would still like to at least try because I'm on unemployment. It's just before the holidays, and I know they're banking on me not responding, and I don't have anything for them to garnish, and I understand that they can lien my house, so I don't want to pay this right now. I don't have time for it. So if all we're going to do is kick the can down a little bit, I would prefer to just do that. And if it ends up getting dismissed, even better. And instead of doing it myself, I thought I would get an expert to do it for me. So this is the route I would like to take. At the end of the conversation, he was like, Jenny, I don't want you to stress this season. I will take care of this. You don't have to worry about a thing. I will make sure this is taken care of for you. That man is going to get that shit dismissed.
That is the worst attitude to have about a situation like this. She borrowed the money and doesn't want to pay it back. To me, that's stealing. It's just that simple. I know a lot of people would just brush it off and say, well, it's a credit card company. They take advantage of people. Who cares? But that's what you agreed to when you signed up. I've had bad interest rates. I've had loans that weren't so great. I accepted those terms and I paid them back. Unfortunately, this type of thinking seems to be getting more common. Take the money, walk away, and act surprised when borrowing gets harder later.
Let's add another bank to my list. And I'm done with all these banks. Yes, I need to boycott all the banks. And on today's list is Scotiabank. We get a letter. Yay! I didn't choose Scotiabank. That's how my vehicle got financed. And I got a letter in the mail this week saying, oh, by the way, the terms of your loan are changing. I'm sorry, excuse me. You can change the terms of my 5-year loan? Not even halfway through. As I'm reading this, I go, okay, so my annual interest rate didn't change. My annual percentage rate changed. Wait, what the is an annual percentage rate? When I was at the dealership, I signed up for a 4.99 interest rate. There was nothing in there but a second interest rate. I don't understand. So what do? I take the phone number on the original agreement and I try to call somebody. I get a call center. Can they help me? No, I need to speak to a branch.
So many people don't actually understand what they're signing up for. And when it comes to something like the bank change in the APR, there really isn't much of an excuse anymore. The information is right there. It's in the paperwork, it's in the disclosures, and it's something you can ask about before you sign. A few extra minutes to read the terms or question a rate change could make a huge difference. Because even a small change in APR can cost you a lot over the life of a loan.
Try to find a branch phone number, and then it gives me, to the directory. Just state the name or the extension that you know the person that you want to talk to. No, I don't know the person. I don't have a representative at the branch. I was just told to call a branch. You think you can hit 0 and get in touch with somebody at a Scotiabank branch? No, it brings you back to the call center. I'm sorry. What? I don't want a call center. I have to talk to a branch. The call center can't help me. When I tell you I lost my mind. I was so pissed off, okay? I ended up finding them on the internet and scheduling a phone call. I had to book an appointment to schedule a phone call for somebody to explain to me why my interest rate went up. What did we ever do before AI, ChatGPT, and DeepSeek? Because I ended up putting my loan into the AI with pictures, and the AI was able to explain my loan to me. So essentially, my loan is going up $40, but I'm like, how? Why? Excuse me? You're trying to get an extra $40 out of me out of this car loan? Do you guys know the price of vehicles these days? And at the same time, do you know what $40 could buy me in groceries?
I get notifications from time to time about a rate change on my credit cards or line of credit, but I don't carry a balance, so it doesn't affect me. And that is the best way to avoid this stuff altogether. Not understanding what you're signing up for isn't a great excuse, especially when it's clearly spelled out in a contract. There's no point in arguing with the bank after the fact. If it's in the agreement, they're allowed to do it, and you're the one who has to pay it.
3 items, because groceries are insane as well, but that's not the point. The point is, every dollar counts, and you're trying to get an extra $40 out of me? No, I scheduled my appointment. I'll be talking to somebody at the branch. You're gonna fix this, Scotiabank, because no, you're not getting another $40 out of me. If anything, you should be taking extra money off of me, because I didn't understand when I signed the loan that I agreed to pay an actual sum of interest up front. I'm like, wait, what? I was told, and yet somehow if I still pay off the loan early, I still save money, but I still had to pay like this upfront interest. I just feel so duped right now. Mind you, I was in a completely different financial situation when I signed up for this loan, and now I feel like I just know so much better. So now I'm going to be looking into what can I do to change this. Scotiabank, I am done with you as well. So let's see. Scotiabank, TD, CIBC. I am like out of the big banks. I am totally going digital and credit union. Bye-bye.
Her thinking the bank should reduce her payment because she didn't understand the terms is ridiculous. And honestly, I don't think it's really about the $40. She's had issues with multiple banks, and usually when that happens, it's not because every bank is doing something wrong. It's usually over things that are pretty standard and well known. I don't know her situation for sure, but if I had to guess, the real issue here is debt. Being in over her head, having nothing in the bank, and feeling stuck. A lot of people in that position look for somebody else to blame instead of taking responsibility for how they got there.
I have some bad news. Turns out the bank that I go through for my auto loan, that's 8 years long, doesn't do principal only payments. I just called them and I was like, if I wanted to do a principal only payment, how would I go about that? I don't see the option online. And she was like, we actually don't do principal only payments because we don't have like the interest front loaded. It accrues daily. So we don't do those for our auto loans. And I was like, okay. She's like, but obviously if you pay it off faster, if you make more payments, throughout the month or pay more than your minimums due, you're going to end up paying less interest. And I'm like, yeah, okay. But you can't make principal only payments. Balance on my auto loan, May 15th, like right after I paid the last one, was $22,876. And I think I came on here and told you guys I want to try to pay and get that below $22,000. So pay off $876 within June. But now my auto loan is at $22,998. So it has accrued $122 worth of interest.
A lot of people don't see banks for what they actually are, a business. They're not a charity and they're not there to customize a deal after the fact. Their job is to lend money and make money while doing it. That's it. When people go into these agreements expecting the bank to be flexible or make exceptions outside of what the contract allows, they're just setting themselves up for disappointment. The bank isn't concerned about how you'd prefer the payment to be applied. They're concerned about following the terms that were agreed to and getting paid accordingly.
Over the last almost month, as my payments aren't due till mid-month. So now I'm gonna have to pay almost $1,000 in order to get it below $22,000 this month. So yeah, so no principal payments, and I have accrued $122 of interest just this month. That's like a lot of money. I'm like, oh my God, like I'm going to continue to pay more. The lady did say that if you make like more payments, like let's say I make like $100 payment here, $100 payment there, including my regular payment that I'm going to make, she goes, it'll be better because then the accruing days of interest like will start over. So instead of having like 30 days of interest and that accruing on top of each other, if I make a payment every 7 days, even if it's like $100, then the interest will start over accruing after the 7 days instead of accruing over the 30 days of the month, if that makes sense.
Too many people don't figure out the terms of the loan until they're already in it and making payments. That's when they start knowing where the money's going, how the payment's applied, and what they can't do. Not when they sign, but months later. By that point, the deal's already done. And all that's left is learning how it works the hard way. All she can really do is adjust how much more she pays because the loan itself isn't changing.
Could you imagine giving a random stranger a $20,000, $50,000 loan? Just giving them money, not asking anything from them, just giving them a loan of $20,000 to $50,000, perhaps more. Like, really? Are you not going to, if you do, are you not going to ask everything from them, even their blood sample, to ensure you get that money back? Are you not going to harass them day and night if they were to miss a payment and ask for that money back? Like, come on. You gotta realize the banks have risks, just like we do have risks of giving people money. And when you say, oh no, I will pay back, if anything, I'll pay off sooner, come on. This is what your credit history is for. This is what we look at and what the banks look at. And this is how they determine if you're really truly going to do with what you say you're going to do. Because we all talk, but is the action to what we say is accurate? We know we all talk more than we do, right?
This really comes down to expectations. When you have low or no credit, you don't have the same options as somebody with a strong history. You don't get flexibility, you don't get special treatment. and you don't get to dictate the terms. And in some cases, you don't get approved at all. If you do get a loan, it's more expensive, the rules are tighter, and the margin for error is basically gone. That is not the bank being unfair. That's the cost of borrowing before you proved you can handle it. If you want to see more, you know what to do. I'll see you in the next one.